Imagine this. You wake up one morning, check your mailbox, and find a letter saying you owe tens of thousands of dollars, not for something you bought, but for your loved one's final expenses. Shocking, right? That's the nightmare life insurance is supposed to prevent. But here's the twist. What if I told you not everyone actually needs it? And for some people, it can even be a waste of money. Today, we're going to clear up all the confusion step by step, so by the end, you'll know exactly whether life insurance is a smart move for you or something you can skip. Number one, what life insurance really is. At its core, life insurance is a contract. You pay the insurance company a certain amount regularly, and in return, if you pass away, they give a lump sum to the person or people you choose, your beneficiaries. Think of it like a financial safety net for your loved ones. It's not for you, it's for them. Example, if you're the main breadwinner and you pass away unexpectedly, life insurance could replace your income so your family can keep paying bills, mortgage, or even college tuition. Number two, the two main types of life insurance. Life insurance generally comes in two main forms: term and permanent. Term life insurance covers you for a set period, like 10, 20, or 30 years. If you die during that time, your beneficiaries get paid. If you outlive the term, the policy ends. It's often cheaper and straightforward. Permanent life insurance lasts your entire life and includes a cash value component you can borrow against. It's more expensive, and while it has extra features, many beginners don't actually need them. Example, if you're 30 and buy a 20-year term policy, you're covered until you're 50. That might be enough time for your kids to grow up and your mortgage to be paid off. Number three, who absolutely needs life insurance? If someone depends on your income, life insurance is essential. That could be your spouse, kids, elderly parents, or even a business partner. Example, let's say you make $60,000 a year and your family relies on that money to pay rent, buy groceries, and keep the lights on. If you were gone, how would they replace that income? Life insurance answers that question. Number four, who probably doesn't need it? If no one relies on your income, you might not need life insurance at all. Single with no dependents, debt-free, plenty of savings, you could skip it. Example, if you're 25, living alone, and have no debt or dependents, the only reason you might want life insurance is to cover funeral costs, which can be done with a small, inexpensive policy. Number five, how much coverage you really need. A simple rule many experts use is to get coverage equal to 10 to 15 times your annual income. But this is just a starting point. Think about your mortgage balance, debts, your kids' future college costs, and everyday living expenses. Add it all up. This gives you a better picture. Example, if you make $50,000 a year and want to cover 15 years of income, that's $750,000 in coverage. Number six, how much it costs. Term life insurance is often surprisingly affordable. A healthy 30-year-old could get a 20-year, $500,000 policy for around $20 to $30 a month. Permanent life insurance is far more expensive, sometimes 10 times the cost for the same coverage amount. Example, the cost difference could be like paying for a gym membership versus paying rent for an entire apartment every month. Number seven, the big mistake people make. Too many people buy the wrong type of life insurance because an agent convinced them it's an investment. While permanent life can have benefits, for most beginners, it's overkill and eats up money that could be better invested elsewhere. Example, you could take the money saved from buying term instead of permanent, invest it, and potentially grow a large retirement fund over time. Number eight, when to buy life insurance. The best time to get life insurance is before you need it. When you're young and healthy, the older you get, or if you develop health issues, the more expensive it becomes, or you could even be denied coverage. Example, a 25-year-old might pay $15 a month for the same policy that costs a 45-year-old $50 a month. Number nine, the hidden perks of life insurance. Some policies offer living benefits, which allow you to access part of the death benefit if you're diagnosed with a terminal illness. This can help cover medical bills or make life more comfortable in your final days. Example, imagine being able to use $100,000 from your policy while you're still alive to pay for treatment or create memorable experiences with your loved ones. Number 10. Common myths to stop believing. Myth 1. I'm young, so I don't need it yet. Reality. That's when it's cheapest. Myth 2. My job's life insurance is enough. Reality: most employer policies are too small, often just 1 year's salary, and you lose them if you leave your job. Example: if your company offers $50,000 in coverage, but your family would need $500,000, you're underinsured by a massive amount. Number 11. What happens if you don't have it? Without life insurance, your loved ones could face massive financial stress. They might need to sell the house, delay college, or take on debt. Example: I knew someone whose spouse passed unexpectedly. Without life insurance, she had to move in with relatives because she couldn't keep up with the mortgage. Number 12. How to avoid overpaying. Get quotes from multiple providers. Use online calculators and compare carefully. Rates vary widely, and sometimes the same company charges different amounts for the same coverage depending on how you apply. Example: applying through a broker might save you more than applying directly to the insurer. Number 13. What to do if you're on a tight budget. If you can't afford the ideal coverage amount right now, get a smaller policy you can afford and increase it later. Having some coverage is far better than none. Example: a $250,000 policy could at least pay off your mortgage and give your family breathing room. Number 14. When to review or cancel your policy. Your life changes, so should your coverage. Review your policy every few years, especially after big life events like marriage, buying a house, or having kids. Example: if your kids are grown, mortgage paid, and you've saved enough for retirement, you may not need as much coverage anymore. Number 15. The bottom line on life insurance. Life insurance is not about you. It's about protecting the people you care about most. For some, it's essential. For others, it's optional. The key is understanding your needs and making a decision that fits your life, not someone else's sales pitch. Example: think of it like an umbrella. You only open it when it rains, but you're glad you had it before the storm started. Number 16. Life insurance can protect your business. If you own a business, life insurance can be the safety net that keeps it running if you pass away. A payout could help your business partner buy your share or keep the business afloat during a transition. Example: a small bakery owner used a life insurance payout to hire a new head baker and keep the shop open after her partner's unexpected death. Number 17. It can cover final expenses without burdening family. Funerals in the USA often cost between $7,000 and $12,000. Without insurance, that cost might fall entirely on your loved ones. Example: a basic burial policy can ensure those expenses are covered, so your family can focus on grieving instead of fundraising. Number 18. It can help pay off large debts. If you have significant debts, like a mortgage, car loan, or student loans, life insurance can ensure your family isn't stuck with the bill. Example: a $300,000 policy could pay off a house and leave the family debt-free. Number 19. It can support aging parents. If you're financially helping your parents, life insurance can continue that support even if you're gone. Example: a payout could cover your parents' rent, medical bills, or assisted living costs for years. Number 20. It can be a tool for estate planning. For people with larger estates, life insurance can provide cash to cover estate taxes, so heirs don't have to sell property or assets quickly. Example: a farmer might use a life insurance payout to let heirs keep the land instead of selling it to pay taxes. Number 21. It can help fund charitable giving. You can name a charity as your beneficiary, ensuring your values and causes are supported after you're gone. Example: a teacher left a life insurance payout to a local literacy program, funding scholarships for decades. Number 22. You can lock in lower rates early. Buying when you're younger and healthier can secure low rates for decades. Example: someone who buys a 30-year policy at age 25 might keep the same low premium until they're 55, even if their health changes. Number 23. It can bridge the gap until retirement savings grow. If you're early in your career, your retirement savings may be small. Life insurance can protect your family's financial stability until those savings are enough to stand on their own. Example: a 20-year policy can ensure your family has income replacement while your investments grow. Number 24. Some policies offer riders for extra protection. Riders can add benefits like coverage for accidental death, disability, or critical illness. Example: a critical illness rider could pay out if you're diagnosed with cancer, even if you survive. Now that you've seen who needs life insurance, who doesn't, and exactly how to figure it out for yourself. Here's the big question. If something happened to you tomorrow, would the people you love be financially safe? What do you think? Should life insurance be something everyone has, or only people with dependents?